mean nobody heard me last night? This room. Oh, right. Lovely. Thank you very much. I'm relieved about that. That's good. That's good. This reminds me about the new Musical Express concert at Wembley in the 1960s with the microphone right up to people's mouths. Excellent. Right. Okay. Welcome along to the Audit Committee. I'd like to begin by welcoming those members of the public and press who are in attendance and those watching the live stream of this meeting via the Council's YouTube page. You may hear me sniffling. I've got nothing serious except hay fever. With this wind going along, my eyes are streaming and I'm sniffing, and it's horrible. But anyway, we'll carry on. A few housekeeping rules before we begin. If members of the public in attendance need to use the facilities, these are located back through reception in the main foyer by the coffee shops. If there's a fire alarm, please leave the building by the nearest fire exit and make your way to the concourse, which is located just before the multi-storey car park. Item 1, apologies for absence. Are there any apologies for absence?
Thank you, Chair. Yes, we've had no apologies for absence.
Right, thank you.
Apart from Kirsty, because there's no point both of us being here for the same items.
Okay, right. Kirsty could have come instead, you know. I'm joking. Hi there. Item 2, declarations of interest. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? If so, please can they raise their virtual hand now? Nope. Right. Item 3, minutes of previous meeting. Members, we are asked to agree the minutes of the meeting held on the 22nd of March 2021 and the extraordinary meeting on the 21st of June 2021. If there is any dissent, please can members raise their hand now? Nope. Okay. Members, there is no dissent, therefore the minutes are agreed. Item 4. EY verbal update. Please can I ask Ernst Young to introduce the report. Neil?
Thank you, Chair. Can you hear me first and foremost?
Yes.
Good. Okay, and thank you for accommodating me to join the meeting virtually. You have a verbal update from EY at this meeting, but included in your papers is a national letter that was issued by our contact partner for our public sector audit appointments as part of our contract with public sector audit appointments, Janet Dawson. That letter sets out the backdrop to our scheduling of external audits for the 2020-2021 financial year, and has been written in response to ongoing inquiries that have been performed by both the National Audit Office, but also Parliament's Public Accounts Committee that have looked into the time.
Hello there, did you want to start again?
Hi, yes. Can you hear me?
Hi, Neil. Yes, we can hear you now.
Yeah, okay. I mean, at the moment I'm looking at myself and on a screen with some with what looks like a desktop in front of me, so I do apologise. So I don't know how much you heard before I cut out, because I didn't know whether you were hearing what I was saying.
Yeah, I think it might be worth just starting again, Neil, from the beginning.
Yeah. Okay. Okay. So thank you for accommodating me to join virtually. The purpose of this update is to provide a verbal update on our plans for undertaking the audit of the council's accounts and assessment of value for money arrangements for the 2021 financial year. But included in your papers is a letter that's been issued by Janet Dawson, who's our contact partner responsible for our contract with public sector audit appointments, which covers the contract for our external audit of the council's accounts. That letter sets out the backdrop to our scheduling of high quality audits this year, and has followed inquiries performed by both the National Audit Office but also Parliament's Public Accounts Committee that have looked into the factors impacting on the timeliness of audit opinions in the public sector. And we've set out the principles in which we're going to be scheduling our audits this year, and the discussions that would be taking place with all of the bodies that we audit. And our particular focus is ensuring that there's not a significant delay to the whole of government accounts audit process, and that is seeing organisations that was seeing EY in particular prioritising our audit resource for organisations that are ready for audit in the period before the end of September for those above the whole of government accounts threshold, and those that are below the whole of government accounts threshold will be scheduled for audit after the end of September. And the view and our position as a firm is that we're aiming to catch up on our scheduling and delivery of external audits in the public sector before the end of the calendar year. Can you still hear me?
Yes.
Yeah. Okay. So the principles that therefore that we're following for Peterborough City Council is that actually we are putting a significant level of audit resource into the external audit to catch up from the timetable for concluding the 1920 audit, with a view to a substantial amount of our field work being concluded by the end of September, early October. But we won't be in a position to issue our final audit report and the issue of the statutory audit opinion by the end of September. And the plan is that we would bring our detailed audit plan to the 13th of September audit committee, and a view of coming to the audit committee at the end of November to deliver our audit results report and to enable the officers to authorise conclusions of the audited accounts. That does bring the council's timetable for audit more back in line with the rest of the local government bodies that we audit, and puts the council back on track to enable us to deliver to the accounts and audit regulations timetables for next year, for the 21-22 financial year. But I do want to reassure members of this committee that we are committing significant resource in that period up to the end of September to be consistent with organisations that are above that whole of government accounts threshold, which does mean that we'll be able to advance a lot of our audit. But as we are in the middle of our planning process at the moment, fresh from concluding 1920, I'm not in a position to bring a written audit plan to you, but I do want to, if I may, Chair, just run through where my current thinking is about those areas that will drive our audit work this year.
Yes, please.
Yes. Okay. So based on preliminary planning discussions I've had both with my team and ongoing discussions with officers and reviewing key documents, and actually ongoing discussions we've been having with those that are undertaking the reviews for MHCLG at the moment, our focus in terms of significant risks and areas of focus on the audit of the financial statements will be in areas very similar to our focus for 1920. So those areas that drive our assessment of fraud risks, we'll be continuing to look at the management override of controls as a risk, particularly looking at unusual transactions, estimation techniques and journal entries during the year and at the end of the financial year. The incorrect capitalisation of revenue expenditure and judgments associated with recognising revenue funded by capital under statute will be areas that we have identified as a relevant fraud risks from an audit perspective. And we'll also be looking at closely at the council's accounting for its minimum revenue provision. In terms of significant estimation and judgments within the financial statements, the council's valuation of its property, plant and equipment and investment properties will still remain a significant audit risk this year. We have been determining whether any aspect of the council's asset population could be reduced in risk this year, because the backdrop to the valuations work last year did have an overlay of the COVID-19 material uncertainty expressed by valuers, but we have actually seen that the council's valuer currently, to my understanding, has expressed a material uncertainty associated with office and retail assets, and therefore as a result that I think drives us down the fact that we see a significant risk then in the valuations across not just the council's other land and buildings but investment properties, and we'll be continuing to involve our EY real estate team to support us with that work this year. Members of this committee will be aware of where we reached in concluding 1920 on the decision making associated with the loan to Empower and the post balance sheet events, and on the arrangements that the council made for making that decision. Now we're looking. Now you would expect for 2021, we're looking at the flow through of that decision into the accounting of the Empower loan in the 2021 accounts and associated disclosures, and that will be a significant audit risk in terms of our work on the financial statements. What's new this year and wasn't a focus in 1920 is the accounting for the COVID-19 grants. So the council would have been in receipt of significant volume and value of COVID-19 grants, and how the council account for those depend on whether they are acting in their own right as a principal or acting as an agent, and therefore there are judgments associated with the conditions with those with the grant payments and the extent to which the council has sufficient control over how those monies are used and distributed. So therefore we will be looking at how the accounting for those grants has been recognised in the financial statements, and those are sizable amounts, and therefore as it's material it would be a significant risk. There are areas of higher inherent risk consistent with prior years, so the accounting for the net pensions liability and the programme of work from the pension fund auditor on assurances such as asset valuations in the pension fund will still be an important area of consideration. Ongoing disclosures around the PFI scheme and judgment associated with impairments of receivables as well, and the provisioning for business rates will still be an area of focus for us on the audit, but don't drive currently a significant audit risk. On the value for money, so stroke going concern part of our work, then we did, as members of this committee will know, we undertook a significant volume of work in this area last year with specialist support. The council put into their financial statements appropriate and thorough disclosures associated with material uncertainties and the backdrop of the capitalisation directions from MHCLG. And you'll recall the level of work we undertook to review the council's arrangements for financial resilience and the qualified value for money conclusion. So with that detailed work in mind, we are intending to undertake a top-up of that work just to review the council's current financial forecasts, stress testing the budget and medium-term financial plan as it stands now, and also just topping up our understanding of the robustness of the arrangements for delivering the savings and transformation plans. So this won't be a repeat of the same work we've done before, but a top-up to bring our knowledge and understanding up to date and to inform our final audit reporting. And for this year, for 2021 audits, that reporting on value for money in particular will look and feel different to you as members and to those that read our reports. We are encouraged now to issue what's called a narrative commentary, where we've identified significant weaknesses. We have to set out in more narrative form what those are and what the recommendations are for the council. It's probably fair to say that the council's financial resilience and the backdrop of the material uncertainty ongoing concern is clearly an area that is a significant risk for us, and therefore to focus on the audit. And I am asking for that work to be prioritised so that we have a view before the end of September on the nature, timing and extent of any further reporting that we want to make on the council's financial position. And I will obviously be talking frequently with Pete and Kirsty on the outcome of that work and what does that mean for our reporting responsibilities as your external auditor. We also looked closely at the decision making on the Empower loan, actually quite and the future arrangements associated with the management of those assets, the solar panel assets. A lot of that was undertaken towards the end of the 2021 financial year and during 21-22. So we've covered a lot of ground already in the work that we did to close the 1920 audit. But again, we'll be topping up our knowledge on the latest position with the Empower arrangements, and we'll report any update to our findings to the Audit Committee. The only other couple of comments that I would make, the first is that we don't intend to change the basis of our materiality, which is based on gross expenditure. The percentage point we use, I think, will be consistent with the prior year at 1%, and the level at which we test our the income and expenditure and balance sheet transactions will probably be at a similar threshold to about 75% of that level. So once we've reviewed the draft accounts and updated our materiality figures, you'll see the actual figures we're referring to in the audit plan that comes to the next committee. With that, Chair, that covers my verbal update. Hopefully that's been helpful to members of the committee to say that fresh from 1920, we are carrying on with the audit. We've made good headway on planning. A lot of our routine work is now substantially concluded, and we're all set to start our substantive work from mid-August onwards, and with a view of bringing a detailed audit plan to you at your next meeting.
That's it. Okay, thank you. Members, have we any questions? Okay, I'll start one off, and this may be amateurish and naive, but you've talked about uncertainty of value, particularly with regards property. Do you just then say it's a risk and then identify what type of risk it is, high, medium, low, or something similar? And do you give recommendations about how we should deal with that risk, or do you leave it to ourselves to do it?
So the council themselves already undertake a significant programme of work with their valuer to obtain valuations of your assets as part of preparing the accounts, and in doing so the valuer sets out the assumptions that they've used in arriving at those values. And what we always look to assess is how management have assessed the appropriateness of those valuations, any change in valuation estimation technique, any particular change in methodology that might heighten the risk of material error in those valuations. So actually, we wouldn't be making recommendations unless we see control weaknesses in the way in which the council undertakes its programme of valuations. But I think, Chair, your question is not naive, because what we should be doing when we look at the council's asset base is actually disaggregating it to determine which of the council's assets represent a higher risk and which of those represent a lower risk, and we would not expect to have a significant level of estimation and uncertainty. What we are seeing, though, post-COVID, particularly those assets that are more volatile to the office retail sectors, is we're seeing a greater degree of estimation uncertainty and subjectivity in those valuations. So that is driving a higher risk on our audit, and we've determined it's a significant one. But it's not a naive question, because there would be some elements of valuation, particularly plant and machinery, for example, which could be a lower risk, depending on the extent of available cost information that can be easily verifiable. Perhaps what I should have said in my introduction is that one thing we are asking the council to revisit this year is any other specialised assets. So, for example, the waste plant, that is a very highly specialised asset, and I think it's appropriate every single year with the passage of time that the council ensures it's got an appropriate valuer to value such a specialised asset of that nature, and we're asking those questions as part of this year's audit.
Okay, thank you. Any more questions? Councillor Ali.
Thank you. You mentioned, specifically, as you brought this out, you said you're going to be investigating the accounting of COVID-19 grants. So I assume that's an area of particular importance to you, but I would have assumed that whether we were acting in our own right or acting as an agent in respect to the spending of those COVID-19 grants, you'd be removing both the grant and the service provided. So I wasn't sure why you'd be so interested in that particular area. I don't know if that's a question for Pete, probably, or for Ian.
Well, so So, Councillor, I can start by saying that I understand your point where the council's acting as agent, but what you may find is that that's not been appropriately accounted for in that way. So I think we have to understand all of the grants that the council's received and that it is appropriate to treat it on an agency basis. Actually, from the exercise, from the research that we've done today, actually there is some inconsistency across the local government sector on some grants as to whether they are principal or agent in nature, and given some of these grants are material in nature, we need to make sure that they've been treated appropriately. So whilst I appreciate your point, if we've concluded that agency accounting is appropriate, then actually the level of work we'd need to do would be representative of everything that you've just said, but we need to get, first of all, comfortable that that classification is appropriate. And then when it's been accounted for on a principal basis, have the conditions been appropriately exercised in the recognition of the grant, those grants in the accounts?
So is it like you're trying to identify any potential cross subsidies that may not be identified appropriately?
Yes, there's some of that in there, yeah. But I think you start from the point of determining whether they've been classified and appropriately under the accounting standard, and then go from there. There is a subset of risks associated with all of this, particularly, for example, small business grants is a good example of this, about how money is being provided to councils for distribution in those very difficult times following the COVID-19 outbreak, and there are areas which are perhaps more susceptible to fraud, for example, and clearly as part of our value for money work, we'd want to ensure that the council put appropriate arrangements in place to in terms of the management and monitoring of those payments as well.
And just to follow up from what Neil's saying, if we look at what we've got in terms of COVID support from the start to now, we've had probably 70 different grants amounting to £170 million. A high proportion of those have been to help businesses in terms of either business rate support or direct grants to business. Others have been for direct services, including for things like test and trace and other things. It's fairly normal for our external auditors to look at our grant levels. The business grants in particular, we've been given guidance from central government in terms of how they wanted us to account for them and also to validate that they were correct or not. And in our respect, I think we did only 20 or 30 payments by cheque. Everything else has been electronic, far more auditable and checkable. As part of the process that Steve follows in terms of internal audit, and one of the things that Neil will check, our internal auditors also validate the grant processes. And so Neil will be looking at the work that Steve and his team have done as well. Because if I take away the 170 million of COVID stuff over the last 18 months, in a normal year, we have a 100 million grant for schools, the direct schools grant. We have a 40 million housing benefit grant, and we have other grants, probably around 20, 30 million pounds, but also have to be audited by Steve's team to make sure we've done them correctly. So there's a significant amount of money that is checked in that way.
Thank you both.
Any more questions? Nope. Okay. Right. Thank you, members. There are no more questions. Therefore, I'd like to move to the recommendation on page 13. These are to receive an update from EY as at 29th of July 2021 for the following: current position with scheduling audit, proposed timetable for Peterborough City Council audit, the areas of external audit focus, reference to the recent Public Accounts Committee report on the timeliness of local auditor reporting on local government. Members, if you are not in agreement, please can you let me know now? Nope. Okay, thank you. No hands are raised. Thank you for the recommendations, and they are therefore agreed. And thank you very much.
I will take myself off camera, although I look to have frozen on the screen if I'm looking at what's in front of me there. But yes. I'll probably take myself off camera, but I will still be in the meeting. Okay, lovely. Thanks. Thank you. Thank you. Right, on to the next item. Item 5, draft statement of accounts. Please can I ask the Head of Corporate Finance to introduce the report?
Thank you, Chair. These are the statement of accounts for the 2021 financial year. Legislation changed a couple of years ago, and councils don't actually have to bring the draft accounts to Audit Committee. I think it's best practice that we do, to give you the opportunity to see them before the audit process has begun in earnest. These accounts have been prepared in terms of following all the required legislation and requirements we have to follow as a local government officer, as I do as a local government officer, because it's my name at the bottom of them. I have to sign the accounts off and have them certified by the 30th of November following the audit. And again, that is a key thing in terms of a control network for the council, but we've got our accounts finished by that time. The Audit Committee have to also, as part of that process, approve those accounts no later than the 30th of November as well. So it's a joint process we do together to make sure that we're happy with them. As I say, the accounts you've got in front of you give you the opportunity to ask questions on where we are at the present time. We've brought them to Audit Committee today. We have to have them, and they are on the website for review by the public. In terms of what we've got, they have a number of specific sections. The narrative report, which sets out what we've done over the last year. The statement of responsibilities, which sets out the council and my responsibilities in terms of delivering the accounts. Then the comprehensive income and expenditure statement, showing where we've spent money. The movement in reserve statement, and I'll come back to that in a minute because you'll see some significant changes in that statement. And then the balance sheet, and again, the flip side of the balance sheet is what we're going to talk about when I talk about the movement in reserve statement. We have a cash flow statement, the notes, and there's some interesting notes. The public are always very interested in the senior officer annulments, amongst others, and also the related party transactions for members. And what that is, it shows some of our members provide services to the council. It just shows that we have correct lines of demarcation where that happens. And we have as a separate item, the next agenda item, the governance statement. I'll take you through that. Group accounts are new for the first time as a requirement for us this year. This is because this is the first year we've had a full year of Aragon Direct Services. And I'm not walking up and down like I did last night to put the lights back on. So that is new this year, and that is our group accounts because we have an entity with a turnover of over £10 million. In terms of the things to highlight, current assets have increased by 34 million. The majority of this is an increase in short-term debtors, which is money owed to us, by 28 million, relating to policies that we've followed. In terms of other things, long-term liabilities have decreased by 101 million. A lot of this is around pensions, and you'll see an up and down on the pension fund of £100 million. And again, last year, you'll see almost the opposite transactions from the pension fund. And one of the things we will be talking about when the pension fund fully audited statements come from our Cambridgeshire County Council pension fund is why we've got a flip side of 100 million up down this year. So liabilities have increased by 100 million when last year those liabilities decreased by 100 million. And again, they should be using the same assumptions in terms of calculating those liabilities. It's just, it seems to have flipped round. And the thing why I'm concerned about it is the fact that a lot of hard work has gone in, obviously, to deliver the accounts. And it looks a bit strange when you look at the balance sheet and you think, have we got control of the balance sheet when you've got £100 million difference in a couple of the lines? So I just bring that to your attention as members. The other thing is the collection fund. Obviously, the government have given us money, like what happened last year, up front to fund the payment to retail, hospitality and leisure in terms of the business rates. And as such, we've got £28 million worth of additional reserve, which is going to be used through this year to subsidise or the reliefs we've got on business rates for retail, hospitality and leisure. In terms of reserve figures, and when you look at the reserve numbers in overall terms, you'll see a significant increase, almost 50 or 60 million pounds up compared to last year. A lot of that money is actually earmarked for one reason or another. We've already talked about the 28 million. We've got another 13 million pounds that's earmarked due to COVID, and that's just for grants for COVID that have rolled forward because of lockdown. We haven't actually been able to spend it, and that's in line with what's happening with a number of other councils. Again, there's lots of detail in here. Happy to answer questions from the committee, either now or through the next process. I think the only other thing I've missed is the accounts are open for the inspection by the public, and that's in, I think, August.
Okay. Thank you. Members, any questions? No, I'll start off. I was going to ask you about pensions, but you've really covered that. Have we got faith in the Cambridgeshire pensions body, if seeing they've altered by about £100 million?
Thank you, Chair. I think we do in overall terms. If you look at the pensions note, which I can't remember offhand, but I think it's about note 7 or note 8, the actual value of the pension fund has gone up, and so the investment side has gone reasonably well. The issue is with the liabilities, which have flipped the other way, and one of the questions we're asking is, are we using the same assumptions as last time? And if something has changed, is that across the whole country? Because if that's how it's been done for us, it's going to be the same for everyone, because they follow the same. Our actuaries who are Hymans will follow make sure that the same rules are followed.
Councillor Ali.
Thank you. Yeah, I read the note on the pensions, and it does look like asset value has gone up, but liabilities have gone up by more, and that's because we're currently in a low interest rate environment. So when interest rates drop, asset values go up, but obviously because of the long-term nature of your liabilities, you're discounting payments out long-term in the future at a lower rate. So that's where you get the flip. So my question was, given we've got this volatility, which is hitting our balance sheet to the order of 100 million, which is significant, have we asked our actuaries or our asset managers to investigate matching strategies or hedging strategies against interest rate risk?
Thank you, and that's a very good question in terms of where we go. In terms of what we've got on the investment side, that's set in the pension fund statement of investment principles, and so it's set out in there how they do that in terms of our pension fund. On the liabilities side, and I think it's the liability side where we have the issue more than anything else. And I agree with what you're saying about the interest rates, and it is slightly perverse how it works in the opposite way round. But we've been in low interest rates now for a number of years, and what concerns me slightly is the flip over the last 2 years. So we flipped quite, and there's not been significant changes in the interest rates over the last 2 years. We flipped down by 100 million and then have flipped up by 100 million in terms of the liabilities. And I can't see any significant changes in terms of average life. In fact, average life has come down slightly, which has bucked the trend over the last 10 years, the last 2 years. It's just getting under the skin of how they're calculating those liabilities, because it's really significant for us.
Yeah, I probably want to take offline. I'll drop you an email on this, yeah. But it's life expectancies probably don't change unless they do a triennial valuation. They do that once every 3 years. The cash flows are the cash flows, and all they do is discount at a slightly different rate. And given we've been in a low interest rate environment for a while, a 0.5 percentage point change is quite a high percentage of the overall discount rate, whereas if we were at 8% and it moved 0.5%, it wouldn't make a big difference. I did have a second question, Chair, if you'd allow me. The other question I had was on these short-term debtors. That's gone up significantly. Do we make some kind of allowance in terms of a proportion of short-term debtors that we will end up collecting? I mean, I'm sure coming out of COVID, a lot of people will be struggling, and it will be quite difficult to reclaim, I don't know, backdated council taxes or business rates.
Thank you. Yeah. So in terms of the short-term debtors, yeah, there's a load around the collection fund in terms of it, and also, ironically, on sundry debt, our sundry debt position in bad debtors came down by 5 million. What we've had to do in terms of the collection fund and business rates and council tax non-collection is the government have given us the ability to spread last year's non-collection over 3 years, but we've still got the bad debt to collect. So that's one of the reasons. You're right. If I look at an NDR in particular, we had a non-collection last year of about 11.5 million. We've already reduced that to 5.9 in the last 3 months. However, with the scheme, and the scheme has gone out of my head now of what people can claim in terms of, can you remember what the scheme's called, Steve? Is it fair? There's a scheme that the government, that the councils have to follow now. If people apply to say we want our debt spread over a number of things, which we have to follow. We've had a couple of hundred applications for that in a number of places now. But another issue why we had a lot of the bad debt last year was courts weren't open. And of course, I don't know, I shouldn't advertise this, but in business rates we did about a week or so ago about 80 7-day summonses, which of course is at the end of the process, and so I'm expecting that number to continue to come down. We were an outlier originally, but we're now starting to get back into where the numbers should be.
Are we all finished, members? Okay. Thanks a lot, Peter. Where are we? Thank you, members. There are no more questions. Therefore, I'd like to move onto the recommendations on page 19. These are for members to review and comment on the draft statement of accounts prior to the Chief Finance Officer's certification by the 30th of July 2021. Members, if you are not in agreement, please can you let me know now? Nope. Okay, thank you. Members, thank you. The recommendations are therefore agreed. On to item 6, annual governance statement. Please can I ask the Corporate Director of Resources to introduce the report. Thanks, Peter.
Thank you, Chairman. We're all about control in this report, in this committee, and this is one of the key control reports we do as a council. It sets out how we have set our controls up, but we follow the SOLAS and SITFA 7 principles in terms of controls, how we follow those principles, what we take into account. So, for instance, you've got the next report that Steve's going to do is the internal audit opinion. Our internal audit opinion gives a reasonable assurance on the overall effectiveness of our internal control framework. This is all about how we do and how we do it well. Our external auditors are of course part of this as well in terms of the review they do. Steve, when he was compiling the AGS, did an internal control and self-government assessment for our chief officers, and that is included in this in terms of some of the items you'll see in the action plan. In terms of the actual governance statement, we've split it into two, Appendix A and Appendix B. Appendix A is the draft annual governance statement. Appendix B are those things on last year's statement we've now taken off because they've been resolved. And so I think it's quite important for this committee to see both bits, to see how we move forward, and it's also a key underlying plank of what governance we have in place. But we do check and follow this up continually. In terms of the governance statement itself, I'd just like to take you, and I'll get to the right page. Let's go back, it's not that far. Here we go. it's page 171. These are the new items for this financial year, and I just want to highlight those to the committee. So social care integration. There is a massive project going on in Cambridgeshire and Peterborough on social care integration, the integrated care system.
Yeah.
Now, obviously, they are looking at a care system that has a north part and a south part. We also, obviously, you'll see from the numbers on the combined, sorry, not the combined authority, the CCG, our clinical commissioning group, that they are one of the more overspent or financially strapped CCGs in the country. And so what we've got to be, and why this is a risk, is just to make sure that we, when we're going into these arrangements, understand everything going on. They also, like Peterborough, have to make significant savings over the next 2 to 3 years to balance their books. The ongoing budget position, I think we've talked about, Neil highlighted in his item. We have MHCLG in at the moment, reviewing our numbers to approve the level of capitalisation direction for this year. We've just had a local government association review as well. Information governance is a key one as well. We did have items on cyber security, but just for information, you know, if you want to do some background on this, you'll see that Hackney are still recovering from their cyber hack 7 months later. And so it's really important that we as a council have all those controls in place to make sure that our data and our systems are secure, because in the end, those systems are key to us delivering our services to our 200,000 residents. Climate change is a new one. It's not a new one, but as most people are now moving forward with plans to get to carbon neutrality over the next 10 years, there's going to be implications in terms of costs, and without a significant amount of support, that's going to be quite a difficult ask. Go the right way, 15. Project management. In delivering to our financial delivery targets and to get to a balanced budget, we'll have a lot of programme and projects to do. We need to make sure we have the capacity to do that. The Empower loan, as per the questions last night at Council, is now, we probably won't be calling it Empower over the next 2 to 3 months. It will be called the Peterborough loan, or the Peterborough solar assets, but it's quite important that we use that properly. It links into the carbon argument, because once there are electric meters on all those 7,700 roofs, we can actually do something with the extra capacity, and that can count against our carbon targets, and that is 100% green energy. So it's a real positive for us. Performance reporting, it's just making sure that we get performance reporting and finance reporting linked up, and that's going through the whole process. Business rate debt levels I've talked about before. We had an 11 million deficit to deliver last year. That's down now to 5.9, but we need to keep an eye on that. In the monitoring report at the moment, we're still running about 2% below target for this financial year. I'm concerned for the 22-23 financial year, because obviously hospitality, retail and leisure haven't paid business rates last year, haven't paid it for the first 3 months this year, and are only paying 30% of it for the next 9 months. Are they going to be in a state next year to actually pay business rates? Will their businesses be back in a rate that they can do that? And it's important because that's about 34 to 35% of our total business rates take. So a big risk for me. And the final one, 2109, is just the 3 areas where we have a limited assurance for our own internal audits, and I need to put those on these papers. Happy to answer any questions on those. And sorry it was slightly long there, but I think it's important to actually highlight what the new risks are.
Yeah. Members? Okay. I'll start the ball rolling. Due to the difference in culture and working practices between CCG and ourselves, are you confident that this is going to be a working relationship, a successful contract, and it's not going to be high risk?
Thank you, Chair. I think the word to use is it's not a contract, it's going to be a partnership. And again, all the right people around the table for it, and it's really got to work in terms of both of us. Cambridgeshire, although they're in a better financial position than Peterborough, are only a couple of years away from our position. They have big issues on the high needs block, amongst other things. And so that's still the same sort of areas. And so we have to work as a health and care community to try and change the unit costs and the costs and the delivery of those services. The CCG had a lot of work done by the consultancy group McKinsey's a couple of years ago. They highlight that a lot of the additional cost in the CCGs is potentially because a lot of stuff goes to to the acute straight away. And what they're advocating is a move to community-based health. Now, obviously, that fits in with what we're doing with Think Communities. And so there are synergies there as we move forward. Of course, we've got to make those steps first. And at the moment, it's in the planning stage of how it moves to those sort of things.
Just to go on from there, experience has been that CCG in particular have had, and I'll use the term contract again, significant difficulties in setting up contracts with other local bodies, local government bodies and also private companies. And they don't seem to worry too much about expenditure. It seems that the public's health is the first priority and they have little regard to overspending. That may be a huge generalisation, but nevertheless, it's a fear that I have in the back of my mind. The other aspect is that, once again, it's Cambridgeshire. And are we going to find that CCG, who are very keen almost immediately on its formation to look towards Cambridge as its base and foundation, are we going to find a lot of the money that would have been spent in Peterborough filtering down towards Cambridge once again?
Thank you, Chair. I think the easy question is I don't know, but in overall terms, if you look at the demography of Cambridgeshire and Peterborough, you've got Peterborough and Fenland, who are quite similar in the north, and you've got in the south a completely different demography in terms of South Cambridgeshire, Cambridge City, East Cambs, and Huntingdon sort of is in the middle. They are very aware of the fact that there are different requirements for the north and the south, and I think this is part of what's got to be ironed out amongst everyone of how that is allocated. If you look at the acutes, and I'm no health expert, but you've got obviously Cambridge University Hospital, you've got Papworth, you've got NWAFT, which covers us, and so you've got a number of different players in this, and that's before you think about the mental health trusts, the ambulance trust, and all the other players. So there's a lot of different things that have to come in, including us, Cambridgeshire, and all the voluntary sector. We can't forget the voluntary sector as well, because they do a hell of a lot in the care and health community as well. So it's going to be complicated, and it's going to be something we have to do, because it's the drive from the government now in forming ICE integrated care systems. We just happen to be in an area that's quite convenient for both, because both the CCG and, if you put us and Cambridgeshire together, councils' footprints are exactly the same. And so that's why we're towards the front of this game.
Thanks, Peter. I really think that we need to look at this on a regular basis. I don't think every meeting it's required, but I think that we need to look at this at least twice every municipal year. Because I'm scared to death over this, because I've had experience with foundation trusts and the CCG before, and I have no confidence in their reliability to perform and to provide a service that's reasonable, not only for Peterborough but for the whole area. And they end up having to go cap in hand with the government to try and sort things out, and I can see that Peterborough is going to suffer more than Cambridgeshire. It does seem to be a rolling programme when everything seems to be with Peterborough and Cambridgeshire Cambridgeshire ends up taking the lion's share. Have we any more questions? Councillor Joseph.
Thank you, Chair. Pete, you mentioned obviously the non-collection of business rates and how obviously a lot of these businesses may well end up going out of business once the furlough grants, etc., are withdrawn, and obviously with the whole impact of it. With such a huge deficit in our ability to collect money, where do we stand then, and what plans have we got in place to try to bridge what will be an even bigger gap, if any?
Thank you, Councillor Joseph. I think in terms of our non-collection this year, we're roughly in line with everyone else at 2%. 2% is still, though, we collect about just over 100 million in business rates, so you know that's still £2 to £3 million. I think we do returns on a monthly basis to central government. MHCLG are talking to Treasury on a monthly basis from the data on these returns, and so if that gap is too wide, I think there'll be some sort of intervention like there has been this year, and we'll get some, it's called a Section 31 grant, but we'll get some sort of grant. We'll be expected still to chase for money, but we will be able, hopefully, to spread it out over a number of years. We will work to minimise that, but we also need to work with our business community, because if we haven't got a business community, we won't have any rates anyway, and so it's a bit circular in terms of what we need to do.
That was kind of my point, that obviously if we have no businesses as they go out of, not so much that businesses are not paying, but if we have no businesses to pay, and that's a significant drop in our income, and where would we go from there? Is it purely, is going to the government the only way forward with that, or where would we stand having less money actually on the table to collect?
In terms of how we're funded, business rates, we take 50% and the government take 50%, and if we don't collect it, we still have to pay the government at 50%. So we will have a deficit, and that's the way it works. Where I'm slightly more concerned is, as we move forward over the next 2 years to potentially being fully funded by business rates and council tax and not grants, that's a real worry for me in terms of, is that gap, if there is a gap, are we building on sand or not? As a sector, it's just not Peterborough, it's everyone. And so that's where we will, a lot of work is going on at the moment, and that's why I think that fair funding will be delayed to at least 23, 24, so we have at least 1 year of no change, which is 22, 23, where we're actually taking the full business rates take, so to understand how it works. Because that is where the worry for most directors of finance is what's that gap in 2 years' time? At the moment, we're getting support. You know, the other issue the government have got is, you know, there's been 330 billion of support for COVID over the last year and a half. That's got to start to be paid, you know, and so the support mechanisms will start to be moved away probably. And again, when that tends to happen, we tend to see more demand for our services.
That's it. Are we happy? Lovely. Well, near as we can be. Yeah. Okay, lovely. Thank you. Thanks, members. There are no more questions. Therefore, I'd like to move to the recommendations on page 151. These are: 1, note the arrangements for compiling, reporting on and signing the annual governance statement. Secondly, to review and comment on the annual governance statement, including any areas which should be amended. And 3, subject to changes identified above, agree and approve the statement for signature by the Chief Executive and Leader of the Council for inclusion in the Statement of Accounts. Members, if you are not in agreement, please can you let me know now? Oh, Councillor Farouk.
Sorry, Chair, it was just a brief sort of grammar point on page 171 under Information Governance 21.03 in the proposal section, which says monthly updates to JMT on these issues and how treats are being mitigated. I think obviously Yeah. Yeah. So if this is the final statement, so just to make you aware.
Okay, thanks, Councillor Farouk. It's Cambridgeshire coming in and causing problems. That's what it is. Okay. Right, members, thank you. The recommendations are therefore agreed. On to item 7, annual internal audit opinion. Please can I ask the Chief Internal Audit? It's got acting here. You're not acting, are you? No. You've been confirmed now, have you?
I certainly have been for a number of years now. Yeah.
I see. I just thought you had another string to your bow doing some Shakespearean acting or something like that. Okay, to introduce the report. Steve, all yours.
Thank you, Chair. So the report which is in front of you is the annual internal audit opinion, which is provided for Audit Committee members with details of all the works which the internal audit function has provided across the council. It's as a starting point, because obviously I'm aware we have a number of new members since we did these previous reports. The Internal Audit Service produces an internal audit plan which goes to this committee in March each year. That sets out our work programme, and by and large we try and work through that throughout the year, and then we do this particular annual report. Last year was obviously completely different from that basis. Our audit plan was due in the March 2020, and that was exactly the same point that COVID hit the whole of the world. The audit committee, which was due in March, was cancelled. Our audit plans were shelved, and we refocused on all our efforts in terms of looking at COVID. So the actual document in front of you sets out a bit of background of how we reprioritise our works. So Peter's already made reference to about COVID grants. We've been heavily involved certainly with the business grants and looking at those, with those being paid across to the various businesses, etc., and doing very good reconciliations and liaising back with government on those. So what the paper you have in front of you, so it sets out the work we've actually delivered throughout the year, how we've changed our approach for the pandemic, and then obviously we have to come to a conclusion. So in particular, if I refer you on to page 192, based on all the works which we've undertaken, I have to actually produce a report saying I'm happy with the controls in place across the council, or I'm not. Well, we've been able, thankfully, to undertake sufficient work across all departments and all various functions to actually say, yes, I'm happy with the systems in place, they are adequate and effective for what we've looked at. In terms of pages 193 and 194, that sets out some of our various outputs we've actually delivered. So that gives us an overview of the number of audits and those assurance levels, whether it's significant or limited or no. There's no limited assurance reports we've identified this year, which is really, really good. And a positive note for the council, our audit plan is based on looking at those high-risk areas. And by and large, you think the high-risk areas, you could find faults and problems in them. We've only identified 3 reports where we've had a limited assurance, which Peter has mentioned in the annual governance statement and a reference in there. They're also enclosed with details within our outturn report here. Once that report is agreed for those limited assurance ones, the executive summary is also provided you for information. One of those is actually in draft. It's almost been finalised now. And as soon as that's finalised, you'll get details of those. So as I mentioned, those are the outputs there. In terms of the number of audits we did, there was reductions, but then there was more of a focus linking in with grants and looking at that side of the business. In terms of going forward on pages 194 to 196, that provides you with some more detailed commentary around the various works we've undertaken in the various governance areas, such as corporate governance, the fraud side, financial governance, partnerships and external organisations. So it's not just looking at the financial controls, which is more of an element which external auditors look at through the accounts. We're looking at all the systems and processes across the council as well. So we've covered a wide breadth of the services provided. I've already mentioned in terms of we've had a input into COVID and simplifying some of the processes so things were done less bureaucratic, a lot quicker to help the business, and that's gone down really, really well. And that's something we are encouraging through all our audits, that let us know early, and if the things are in place, bureaucracy, we'll want to simplify those. So on pages 197, these sort of identify the issues where we've had gaps and we've got concerns. And we'll mention the areas in there: cyber security, disaster recovery. Pete's already mentioned what's happened at other councils about cyber security. We're aware of it as a key risk. It's an audit which we've actually just undertaken, or in the process of undertaking, I should say. Fraud risk overall, that is something which, by and large, we are there's not many frauds that do go on at the council, but it's the risk that needs to be addressed and looked at, and we do look at that. And obviously we're flagging up there about IT assets. In looking at the control of those, we had the sudden change of working in the office to working from home. So we'll just explore to make sure we got full tracking of all those assets. What you have then on pages sort of 200 to 209 are all the audits we've actually undertaken, and that gives you the details of the assurance levels. So as I've already mentioned about them having sort of a significant assurance or limited assurance, and the details of the recommendations we've actually made against those, whether high, medium or low. We've had no critical risks at all. If there'd been a critical risk in any of the systems we'd looked at, that would automatically be a no assurance report. And there's some brief commentary about the various audits we've undertaken. I'm happy to take any questions from the Chair and from the members. Thank you.
Members, any questions? Councillor Ali.
Thank you, Chair. Just on the recommendation grades and also the opinion, just a suggestion. I think it would be quite useful if we could get like a cross grid of the accounts. So where we've got an opinion that should cause concern, how critical is it? How is it high or critical or medium or low? If you had a limited assurance on something that was low materiality, we'd probably be less concerned. So something to bring that out would I think be useful. The question I had on that was, it looks like the 2021 numbers, or the total number of opinions, is lower than the 2019-20. Is that because you're still outstanding some assurances on some aspects, or have they all concluded now?
You're referring to
page 193.
193, the recommendations made.
Total assurance levels. You've got 15 total assurance levels that I've recorded here: substantial, reasonable, limited or no, versus 20 in 2019-20.
Right. The reason for those, obviously, as I've already mentioned, we changed our focus. So there was a lot more of a work in relation to the grants and consultancy side. So we were doing other activities. There was a reduction in resources, which is also mentioned in the report. We did have a member of staff who left us to go to another authority, and also another member of our staff was seconded into the coordination hub. They actually still are in that coordination hub, so they've been there, sort of 15 months now. So we had to reduce down the number of audits we could actually deliver, but we still had to make sure we covered the wide enough area to make an opinion. So that is why there is a drop in numbers. It's more down to resources than not doing waiting for results to come in.
So we've reprioritised the areas where we do audit, but we're still confident that we've not potentially led ourselves to a blind spot that will be picked up by external audit.
Absolutely. In terms of how we do our audit plan is risk assessed. So we take the whole audit universe and those are scored, looking at materiality, the risks in the system, political impact or reputation. Those are all scored, and the highest risk audits, maximum we can score is 80. So we look at those audit areas, but there'll be ones below the line as well, so that lower scores. But it's like a football league table. We're regularly refreshing those scores, so things will move up, and we'll look at those particular audits. Things will drop down. So we're regularly looking at changing our audit plan throughout the year. there could be new risks coming on board which we weren't aware of, obviously, at the start of the year. And probably the biggest example was those when we had our audit plan, which were all set to go in the March 2020. COVID was not on our audit radar at all. And then everything we planned to do was just shelved, and we built it up again with COVID as a key focus, and then doing audits in other areas so we could ensure that we were able to get a coverage.
Okay, thank you very much. I've got one more question, if that's okay, Chair. The other question is on significant issues. You identify cybersecurity and disaster recovery, fraud risks. It's obvious to me that those two are both significant issues. IT assets, can you just explain why that's a significant issue? What's the total value of IT assets that we have that aren't recorded on an assets register? How big of an issue is this?
The issue you identified in terms of IT assets, obviously there was the big push for everybody to work from home, and most people had laptops or Chromebooks. There are also some people who have got use of the second screen. So assets were taken out and expected to be booked out. What we're identifying is not everything was accounted for. Not saying it's been stolen or anything like that. It's people in a rush to take their assets home so they could actually work from home or wherever they're working to do their work. We lost sight of it, and that's what we're just in the process of actually just capturing all that. So it's, for me, that's the basis we're on about. We're not certainly not saying it's material in terms of value, but it's a question of I've got my laptop here, it's got an asset number on, it's booked out to me. It's making sure that we can track on those, and that is one thing which the IT function is looking at and looking to address.
Thank you, Steve.
If I can add to that, I mean, on top of that, there's probably about 220 chairs as well that have gone to people's homes. And one of the things we've got to think about is, and there's a whole lot of work going on about this at the moment, is what is our mode of operation going forward? And that will influence how much we put back in as well.
Any other questions? Councillor Farouk.
Thank you, Chair, and thank you, Steve. You touched on it briefly, and I know Pete did as well, discussing sort of cyber security and network security. Just out of interest, against the budget, what is our sort of percentage of net spend on cyber security, and is this a cost that we've seen rise year on year, essentially, with the more sort of advanced fraud schemes and cyber attacks that we're seeing all over the country and the world, essentially? Thank you.
I can't answer that. I don't know the size of the budget for that at all. I don't know if Pete has anything on that at all.
We'll get you the numbers, because there's various things we do and we just need to add them up.
Perfect, thank you.
As I did say, I did mention cybersecurity is a significant issue. It's an audit which we have planned to do in that current year. We've actually already sort of scoped it with the various individuals, and we've had started it now. So later in the year, when we report back at our progress, which will probably be in the November cycle, you'll get details of that one, exactly what we did, what we looked at, and any particular issues.
Any more questions? I've got a couple, Steve. The first one is, can I order a chair, please? I could do with one at home, it'd be very helpful. With regards to IT, in the past, has our recording of IT hardware been quite poor? And I'm not thinking of over the last year or so, but pre-COVID and years beforehand.
I would say it hasn't been a problem, because obviously each individual laptop or screen, it's got its own unique identifier on there. And then when those are, as it was obviously Serco before, it's now come back in-house. Those numbers are recorded, so they'll have details of all those assets. The issue is obviously when people have taken things home.
Also, when they've left the service, they could just well have the computer at home and never return it, or the printer, or whatever.
as part of when people do leave the organisation, there is a checklist which we do have about collecting passes, collecting equipment, etc. So those should be all in place anyway and happening.
Okay, thank you. How much rent could we rent this building out, seeing so many people are working at home?
Pass on to Pete for that one. I'm not whether Pete knows anything about
circa £800,000 of floor in that end.
So a tempting figure, seeing it's empty.
Well, we do have CITB on the top floor already, and one of the things we're wrestling with at the moment is how many people are actually coming back and how much space do we have to play with. But a full floor is circa 800,000, and then there's add-ons as well, because obviously there's a service charge, and we would obviously like to sell people bits of parking as well. So yeah, it's quite lucrative for us, and we are in an interesting spot with this at the moment because this is probably the newest bit of office accommodation building in the town. But the downside is there's lots of empty office accommodation in town at the moment as well.
Can I take the concession out for car parking at the weekend? No? Oh, okay. Right. And lastly, Steve, is vivacity a bit of an unknown quantity? Could we have taken on something that is high risk?
In terms of vivacity, obviously that returned back to the council. We do have it in our audit plans to look at anyway. In terms of if it's high risk, I don't think I'll actually be able to comment on that. Obviously, we're looking at the systems rather than the actual and how it actually delivers the outputs. We don't actually look at the actual company overall.
My fear is that we hived off Vivacity because we couldn't afford many of the facilities, and Vivacity has run it, and they've now ended, and we've got it back again, and we would be in almost a similar situation as pre-Vivacity. So I'm just wondering at some point whether we need to look at this in a fair amount of detail to make sure it's not going to cause us too many difficulties. Yes?
I agree, Chair. If you go back to the original Cabinet report, which was written for, it would have been Councillor Allen back in August 2000, what we said was we were initially giving it to Peterborough Limited and City College Peterborough to run for a year, and that's obviously potentially going to be extended anyway. And one of the things there was to assess properly the full cost of running everything. Now, that has been tempered to a degree by the fact that social distancing means that people haven't been able to go in the numbers that were normal. And so I think the key is going to be the next 2 to 4 months when, if social distancing is properly relaxed, how that works. Because leisure should be a net income to the council. Culture, obviously, will be a slight cost to the council, and they both offset each other in the original contract.
Okay, thank you. Are we through with that? Okay, that was item 6, wasn't it? That was item 7, did you say? You were 7, right. Right, thank you, members. There are no more questions. Therefore, I'd like to move to the recommendations on page 183. These are to receive, consider, provide, challenge to and endorse the attached Chief Internal Auditor's annual report for the year ended 31st of March 2021. Members, if you are not in agreement, please can you let me know now? No hands raised. Members, thank you. The recommendations are therefore agreed. On to item 8, annual report investigating fraud. Please can I ask the Chief Internal Auditor to introduce the report, Steve?
Thank you, Chair. The report in front of you, similar to the last item, this provides members with an update on how the investigations team has worked in conjunction with an audit team, looking at frauds across the council and investigating those, and looking to hopefully provide adequate assurance to yourselves as members. With scarce resources across the council, all services we expect to be vigilant in terms of fraud, And it's not just reliant on internal audit investigations. Managers have a duty to actually keep an eye on those themselves. Obviously, occasionally, things are identified and those are referred through to us and we investigate those. What the report sets out is some of the key areas which we've looked at. On page 221 in the report, the first area which we're making reference to is the National Fraud Initiative. Now, this is an exercise which happens every 2 years for main data sets and every year for the data sets of council tax and electoral roll. So what actually happens with these initiatives, it's a whole host of data sets which are identified, and those are in the report. We provide those to the Cabinet Office, and they basically throw it through various computer systems and match it with all of the data sets, whether that's data sets which we've provided as a City Council or with other data sets. It then identifies as a result of that a series of anomalies or matches, and those reports come back to us and we then investigate those. So over the next few pages you'll see all the number of hits we've actually had. So you're looking onto the page 222, those are the outputs we got from part of the matches. So the top item there, blue badge parking permits. So that data matches for all the permits which have been issued and then been compared with data sets. I would wage a lot of money on to say that the majority of those data sets relate to individuals who've actually passed away since the previous exercise. So this comes back to the point I'm making 215 about data quality and timeliness of records being updated. We don't always get notified when individuals pass away, and we don't always get those badges back straight away, so they'll still be sitting on the system as a live badge. The data match could have been against records which are held by the records of where people are deceased, and that's what's identified. But there's all other matches there in terms of, like, for example, payroll. That's matches where people are on 2 payrolls. Well, that could be quite legitimate for, say, I could have been working at another authority at the start of the year. I then moved to Peterborough, so I'll be on 2 payrolls when they capture for the first 6 months and the last 6 months. So some of the matches we get are legitimate, and some of the matches will be fraudulent. So we'll work through all those and try and recover monies. The biggest area is probably in 2.2, which is the council tax and single person discounts. As I've already mentioned, we take the council tax list and the electoral roll, and those are matched every single year. And as a result of that, it identifies individuals who may be on the electoral roll. We could have 2, 3, possibly 4 people at a property. But on the council tax system, there's only 1 person there liable for the council tax. As a result of that, we've got talking about somebody claiming single person discount, but there's more people potentially registered at that property for election purposes. Now, that could be legitimate because it could be people who are students. They're at 18, 19 years of age. There is a discount for a single person if they're students, but it also could be fraudulent. So we do that exercise every year, and in previous years, just over £100,000 has been reduced from the single person discount as a result of that. £100,000, which obviously goes back into the council as the council tax for better use. We've also had the business grants this year. Now, that's already been mentioned in terms of all the grants that come in, and potentially that's a fraudulent area. All the data which was paid out, we verified it against bank accounts, we verified it against companies to make sure those companies were legitimate and operating at that time. So we've done all those exercises. It's identified some things which we've got some further anomalies on, so we're following those through. Other aspects of where we have fraud and etc. is council tax support. This is where people there's change in circumstances we're not notified of. Are there contrived tenancies? Are people moving? A husband is moving back in with his wife because they're separated but they're still living together, but they're showing as just 1 person living there. So it's a change in the circumstances. We get notified those whether by letter, anonymous telephone calls, or through the fraud hotline, and we investigate those. Linking in with those, we link in with the Department for Work and Pensions for the Joint Working Initiative. It's in the past, they used to interview people for benefit fraud, and we used to interview people on the council tax side, and they were done separately. Now the initiative brought it all together. Both are done at the same time, so it's one interview leading potentially to one prosecution. With the prosecution, as it's already been mentioned, it's an issue we've not been able to pursue too much this year because the court's been closed. Other investigations which the team undertake, the disciplinaries, which are the staff cases, the blue badge misuse, internal frauds, which are few and far between, and we do actually, in part of investigation, get involved with the corporate complaints process, where things go to stage 2 and we follow those through. What I would like to say is, what we've found across the council, there is not much fraud going on. We're in the process of engaging with all line managers through a leadership programme at present, raising the awareness of fraud, raising the awareness of audit, how to report investigations. Potentially we may see a spike in numbers in relation to that. However, those will all be investigated in proper process. I'm happy to take any questions about what's been undertaken by fraud.
Members? Councillor Joseph.
Thank you, Chair. Thank you, Steve. A couple of things. Obviously, as I mentioned to you before about getting figures for how many people are actually registered for residence permit. You know, so we could look at comparisons to see whether people, now that they don't have to have a physical permit, whether they're deciding to just dodge the whole issue. But thinking about people on the electoral register, obviously is something that we come across, particularly when we're canvassing, is we'll knock at a door and the person who's at the property is clearly not the person who's on the electoral register. And many of the houses, or some houses, will obviously be, there will be nobody registered that address at all. What do we have in place, A, to check that the people who are registered at an address are actually the people living there? And in terms of properties where nobody is registered, what do we do to follow up? Because obviously we have an empty houses policy if they are genuinely empty, or they may well be being rented out and nothing's being mentioned because people don't want to declare the rent, etc. That could be quite a significant amount of money that we're missing out on there. And what processes do we have to try and sort that out?
Going to your first question in relation to parking permits, something you mentioned to me the other day, it's a question I've sent off to the particular service, and as soon as I get that response, I'll pass that on, and I'll pass that on to all members anyway. In relation to electoral roll, obviously every single year we have the canvass, and that goes out, and you're expected to make that declaration of who's living in that particular property. On the council tax side, we are obviously aware of properties which are empty, and there are charges for those. Obviously, if somebody passes away, there is I think it's 6 months before we make somebody liable for that. So there are processes in place for those already. In terms of actually verifying individuals at those properties, this initiative does identify where there are issues. We do refer those through to the electoral register team so they can update their records. We also refer it through to the council tax team, and they can send out visiting officers to do some various checks as well. So there are a number of avenues which will go down to hopefully address a lot of those issues.
Members? Councillor Sainsbury.
Thank you, Chair. It's a very interesting report, and it's obviously quite a serious issue. I suppose I've got a three-part question. So you mentioned about the backlog with the courts. I'd be interested to know what challenges, if we can just drill down a bit on what challenges the council have had in dealing with fraud during coronavirus. I know the courts would be one of them. What lessons have been learned on you know, how I suppose your service of dealing with it could be improved because of the challenges you've had, and what effect you think the backlog of court cases will have on us as a local authority in dealing with fraud cases. Thank you.
Obviously, with the courts, it's not just the backlog in case, you know, cases for us in terms of potentially looking for prosecutions for blue badge misuse or council tax abuse and those sort of things. There's all the other service areas who take things to court. So I couldn't quantify exactly how much it's cost, but it obviously has impacted on a lot of other businesses as well who use the courts a lot. In terms of lessons learned, I think the priority has been, and it's quite rightly been, to deliver services in the COVID pandemic. So we've made sure that people have been able to get their grants. We've made sure, and yes, and some checks have gone on, a lot of checks have gone on to make sure those payments were legitimate. But we've also had to make sure the business as usual. And as part of that business as usual, I did mention on the internal audit side, some of the processes in place are bureaucratic, and auditors have liaised with a number of departments and simplified those, so things are done a lot quicker. Now, those have been done a lot quicker with still with those controls in place. So I don't think fraud has gone up. So the lessons learned, we can do a lot of our processes probably a bit more efficiently, putting those controls in place. And in terms of, and just in terms of backlog, when the courts open, it's probably going to be a big scramble for people to get in there. So it's not going to be something that's going to be addressed overnight. Obviously we're linking in with the Department of Work and Pensions for those joint investigations. So they're now coming back online themselves. They've been moved elsewhere on COVID-related issues. They're starting to build up all their caseloads. They're ready to go to court. So it's going to be who gets there first. The fact we've got this joint working arrangement with them, we'll be using them to do it. So they're probably getting before us, and we'll better utilise that.
Any more questions? Councillor Ali.
You mentioned the national data sets. That's obviously an automated way of identifying potential fraud cases. You also mentioned the fraud hotline. I think you mentioned was one that you'd pick up. What about on things like work you did in internal audit? I saw you had a limited opinion on the teachers' pension scheme, and there was some uncertainty around whether or not that payment should have been made to the teachers' pension scheme or not. Do you have issues like that potentially make their way onto the number of cases that you investigate, or do you just rely on these specific areas where you investigate?
Use an example of the teachers' pension side. That organisation themselves would be submitting their data. So if there are any issues coming out in relation to the teachers' pension side, those will be picked up by that organisation to investigate. The ones we have are purely Peterborough City Council linked ones. So that's what we pick up on. I fully accept what you're saying, that it's identified as a risk for us. Could it be a fraud area? Obviously we're aware of that now, but in terms of payments going out, no, that's with the teachers' pensions.
Okay.
Thank you, Chair. Obviously, there's no way to totally eliminate fraud, so it's something that costs the country billions every year. Do we have a benchmark of how we do against other councils, as a for instance, and if so, where do we sit, and how much do we estimate on average we lose through fraud every year?
There is a national organisation who compiles that data. So each year, normally about August, September time, we get a questionnaire in which we complete the number of frauds we've identified, the values, etc. And they capture all that, and then they produce an annual report on that basis. It doesn't show us in terms of we were the best authority or the worst authority. It shows you sort of the trends and that sort of thing. It's a report which I have brought before the committee before. I think it's probably about November last year when we had the last report on that one. I can recirculate that as giving you an overview of the levels of fraud, which is levels of fraud across the whole of the public sector, not just local government. But obviously the next exercise will be data collecting from us very, very shortly. And obviously when that report's produced, that will come as an information item to yourselves.
Any more questions? Yes, Councillor Attlee.
Sorry, I think Councillor Joseph has said something very similar to what I was just going to ask him a follow-up. You mentioned a figure of £100,000 was collected as a result of some of the work that you did. That didn't seem like a large amount of money given the amount of resource I expect we're putting into this. I think there was a comment earlier about how this is a very, very serious thing. I mean, absolutely fraud is a serious thing, it's a crime, but we do want to be careful that, you know, we recognise the costs versus the benefits. So I presume you're doing a cost-benefit analysis of the amount of FTEs you have working on these areas and how much money you're recouping as a result.
Absolutely, I fully agree with you. In terms of just using that particular one, the single person discount, we get around 3,000 matches, and straight away we can do some analysis on those. We'll probably find out 75–80% of those, it's where the surname is in the forename field. So the fields so that really reduces it down straight away. So that's what we're notifying the various departments, get your records consistent. We then have 10–15% which we look at a bit more detail, and obviously with 100,000, just over £100,000, on the basis of the council tax, say £1,200, with a 25% discount, we're talking about £240. So it's that £240 times however many cases. It's not money which we've recouped straight away. It's monies which is then put straight back into that account to start for that person to pay.
Great. Any more questions? I've just got one idea to put past you, Steve. Instead of chasing a lot of avenues of fraud, why don't we try and get rid of those avenues of fraud? For instance, I may well have mentioned before, instead of having a single person's discount, we remove that, because after all, we don't have extra charges for, say, 3, 4, 5 people in a house. So let's remove the possibility of fraud by removing things like that.
That's something I can't comment on. Yeah, that is a decision which is obviously outside of my control. Those are in place across all councils, the single person discount. That would have to be a legislative measure. In the past, obviously, we did have the community charge, which was based on number of individuals rather than a flat rate for a property. So that was a previous arrangement which would have had 3 or 4 contributions from one household rather than one.
Thank you. Are we done and happy with that? Yep. Okay. Thank you, members. There are no more questions. Therefore, I'd like to move to the recommendations on page 217. These are to receive, consider and endorse the attached annual report on the investigation of fraud during 2020-2021. Members, if you are not in agreement, please can you let me know now? Members, thank you. The recommendations are therefore agreed. Item 9, Annual Record Insurance and Insurance Fund. Please can I ask the Chief Internal Auditor to introduce the report. Thanks, Steve.
Thank you, Chair. This is the third team which I oversee, and this provides members with details of the work which the insurance team does to hopefully deliver good governance and good financial control across the council. There has been a strong focus on maintaining business as usual throughout the pandemic, and overall, as a result of that, because some things have been delayed, such as in terms of covering highways, for example, when we were all in lockdown, nobody was going out driving around in cars as such, so highways were able to do a lot of works on the roads to reduce the number of potholes, etc. So there was a lot of proactive things doing there, and that's probably demonstrated in the figures. So we've got low claim levels in terms of potholes. We've got so motoring claims are down as well. Motoring claims, by and large, that links in with where there's been accidents involving staff, involving sort of Aragon as such, where there's been a refuse collection truck, etc., reversing into a car or knocking down a wall, or and these sort of things. So these things do go on. What we're actually trying to demonstrate here is the trends in terms of those numbers. Overall, they're going down, and that's really, as I said, really down to what's happened with lockdown. We do obviously plot those trends, so we do see where some of those incidents are happening, and that gives us a lot of detailed intelligence which we can go back to the various parts of the business and look for them to address those risks and address those areas. For example, one of the things we make reference into the report is about tree subsidence. Peterborough was built around the same time in terms of all the big urban areas going up, the Bretons, the Wellingtons, the Ortons, etc. They're all built around the same time. And a lot of trees were put in around that same time, and they're all of a specific type. They're all quite close to properties, and the roots now are starting to cause us a number of issues. So we've been able to plot those when those claims have come in, and we liaise with the trees team so we can target appropriate works in there. And that's what the insurance fund is used for. We're trying to target work, so trees do get cut down, unfortunately, but the fund is actually used to, if something's chopped down, it is replaced. So that's one of the positive things that comes out of the insurance works. So using those trends, we've been able to reduce the values of the actual, trying to think of the phrase I'm looking for, the actual amount we pay out for insurance in terms of our liabilities and has reduced. Our actual premiums actually come down slightly as well, because of the way we've been proactive. I'm happy to take any questions about what's going on in terms of insurance, the types of claims we're getting, and the trends.
Members? No? Yes, Councillor Howley.
Just seeing anomaly in the tables, I just wanted to check. You had 2019 to 20. This is on page 234. 2019 to 20, employers' liability, you had 2 claims. But if you go to the table in 3.1.2, you had 0 value of claims. So was that just a nil claim? It was recorded as a claim but no payment?
The issue you'll have is not all of them are settled at the time. So you'll have the numbers of claims received, but some of them go on over a longer period of time. So the value won't be reflected in the table just as yet.
Yep. Okay, that answers my second question as well. Thank you.
Any other questions? Councillor Joseph.
Broken button. Sorry, thank you. So you've got information on the sort of claims. So as for instance, you might be able to say in 2020 X amount of claims were for potholes, as you've said. Does that mean that when we're trying to get roads resurfaced in our areas, we could look to you for information on how many claims have been made in that area for damage due to the state of the roads, and give us an extra, if you like, string to our bow when trying to get resources?
We do have that data, but that data is shared regularly with the highways team, because obviously when they're looking at a claim, they're checking on all the records that are going on with highways, so we can get the details when that road was inspected. Is it intolerance? What's the inspection regimes? So they'll be logging it on their systems when we give that information as well. They'll probably have it on their system as well, because they would have been the initial one to have received somebody reporting needs as a pothole to be addressed. So we do liaise with them. That information is already there with highways. So using that as an example, they do have it. The trees is a different one, because obviously we're plotting that, and those go over a longer period of time. We do liaise with trees team about where are the trends where we're getting more and more claims in, say, Breton, or in Warrington, you know, along the various parkways. So we do flag those up on a regular basis.
Okay, are we done with that? Lovely. Sorry, Councillor Ali.
Just one more from me, I apologise. But the total claims over the last 5 years looks to be around the order of £3.1 million. How does that compare to the insurance premiums we've paid to insurance companies to cover those, or do we self-insure?
It compares very favourably with what our premiums are. There, you know, we do self-insure up to a certain value, which I think is 50,000 in certain areas, and it's 10,000 in others. But I'll confirm the actual figures with you. But in terms of the actual how much is paid out, we are in a, I wouldn't say better position, not an expression to use, but we don't do too badly out of it.
We profit from taking insurance.
Right.
We have effective controls in place to manage what's going on.
Thank you.
Thank you. Councillor Hasib.
Thank you, Chair. Steve, I'm just being a bit nosy here and there. I'm looking at 2018-19. It says the claim was for property was 627,561, and the public liability. I don't know if you remember. Do you know what that sort of claim was, or are you liberty to say that what the claim was for?
I would be at liberty to let you know what that was if I could remember exactly which one it was. I will get the details for that one for the £600,000, and I will let members know exactly what it relates to.
Thank you.
Okay, thank you. Are there any more questions? No. Okay. There are no more questions, therefore I'd like to move to the recommendations on page 229. These are to receive, consider and endorse the attached annual report on the provision of the insurance service during 2020 to 2021. Members, if you are not in agreement, please can you let me know now? Members, thank you. The recommendations are therefore agreed. Item 10. Review of the effectiveness of the Audit Committee. Please can I ask the Chief Internal Auditor to introduce the report.
Thank you, Chair. The report which you have in front of you, members, is seen as best practice assessment of how the Audit Committee operates and delivers. Is it effective, in other words? There's various checklists which we've been able to utilise, which comes from SIPFA, and they've set out in the various appendices. There is a key attributes of what they expect from members, what they see as your role, what they actually see as the skills you need to deliver. Appendix B sets out a compliance self-assessment, which I've completed myself, looking at all the information which has gone through Audit Committee over the last 12 months, what training has been provided to members, what could be provided to members. So that's used as a benchmark, effectively, and it concludes that, by and large, we're operating very, very well as an Audit Committee. Appendix C and D sort of set out skills and sort of areas of knowledge which you may need to get, you know, to provide you information about risk management, or, as we mentioned, information governance and audit roles. And those core skills are developed further in D. So what this document really is for you is, do you recognise this as the Audit Committee you're sitting on? I do appreciate a number of you are new members anyway, so it's a lot harder for you to assess that. But it's really for you to challenge your role, for you to actually see if you match against it, and then come back to the organisation and say, actually, we need more training in a specific area. That's something which myself and other officers can quite willingly offer to give you sort of updates. You've already had one update this year in relation to how the final accounts were built up, and you had a training from that from Pete back in June. I'm going to sort of stop my sort of presentation there. It's really questions from you, and it's that open discussion of, do you recognise this as the Audit Committee you're working on?
Members, questions? Councillor Joseph.
Yeah, just as going back to what was mentioned in the pre-meeting, I think it would be great if we could re-establish the training courses, you know, maybe prior to the pre-meeting or at that time, so that we can have training on the various aspects of the reports, so that obviously to help new members, but also to refresh the skills of the older members, and hopefully give us the ability to be even better at our job and make the accounts and the audit statements even more robust.
One thing I will also issue to members, we do have an Audit Committee handbook, which was issued, the last issue was 2 years ago, so it's due for refresh. That does set out some guidance as well about the various functions as well. So I'll take that on board to get that refreshed and updated, and that will be sent out to members as well.
Thank you. Any more questions? Councillor Joseph, you said about older members and looked towards me.
I did not, Chair.
I think you were looking at Peter rather than myself. I still consider myself a new member. I've only just started to get going. Yes. There is. Steve, I have this opinion about audit, is that it's a high quality, high expertise committee rather than a scrutiny committee, comprised of excellent members and officers, but nobody else seems to care. We're a discreet bunch. Nobody ever asks us any question in full council. We rarely figure in anything. We do this sterling work with your help and leadership, and even when there are serious matters such as about councils owing millions and millions of pounds, nobody ever asks. Peter.
I think this is a really important paper, and I'd encourage members to go away and think about it, and the discussion we've just had, and what Councillor Joseph and what Councillor Over have just said, because if we can improve what you do in any way into how you're coming and looking at these papers and how, I won't use the word scrutinise, but how you're reviewing the papers, because you are a committee that can tell Cabinet if you think something's wrong and they have to act on it. And that's a really, really important function of the Audit Committee. And so you are, if you like, one of the other big checks and balances in the overall structure of the council, the Audit Committee is. And so reflect on it over the next couple of months in terms of what's in there, and as we go through this meeting and maybe the September meeting, because you'll get a much better update from Neil when he's doing the external audit plan, and it'll get you thinking about, oh, there's some gaps here, and then Steve, myself and others can follow that up, because Councillor Joseph is quite right, as is Councillor Over. There's some big stuff that goes on that we need to ensure that you know what the right questions are to ask.
Right, lovely. And can I just emphasise what Peter just said there, that scrutiny committees can recommend. We are far more powerful than that, and we can really shape the direction of where the council's going, because we've got an overview on finance, and you can't do anything without a budget. So we are in a powerful position and a very responsible position. Okay, we'll finish at that point for that item. There are no more questions, therefore I'd like to move to the recommendations on page 241. These are to 1. Consider the response of the SIPFA toolkit checklist for the audit committees, which records that the committee meets all of the good practice statements, to consider the draft responses to the SIPFA knowledge and skills framework for local authority audit committees, and to agree any actions which the committee considers appropriate to amend or enhance the committee's arrangement in light of the completed knowledge and skills framework assessment and the SIPFA audit committee toolkit checklist. Members, if you are not in agreement, can you please let me know now? Members, thank you. The recommendations are therefore agreed. Item 11, Budget Monitoring Report, final outturn. Please, can I ask the Head of Corporate Finance to introduce the report?
Thank you, Chairman. This is the report and is the outturn for the Council's accounts for the 2021 financial year. This report has already gone to Cabinet, but as part of your controls and balances, it also has to come to this committee. In overall terms, last year we had a 3.97 million underspend against budget. We fulfilled all of our prudential indicators. Prudential indicators, the councils since 2003 can set their own debt levels, but you have to set them and keep within those limits from the start of the financial year. If you go outside those limits, they have to report it through this committee to council to be changed. We have been within all of those limits. The report also sets out our performance on the payment of creditors and collection performance for debtors, local taxation and benefit overpayments. As we've said before, our collection performance for debtors and sundry debt is about 5 million better than last year. We've talked about the local taxation issue in terms of business rates being significantly behind where we should have been last year, but council tax held up compared to most, as with most other councils. Just to take you through one or two of the items, in 5 we set out what we've done for COVID and just highlight 90 million of grants and rate reliefs to businesses, 4,180 test and trace support payments to individuals, 1.4 million of local council tax support hardship payments, and almost 750,000 of winter grant support. So significant numbers that we've delivered on top of our normal services. In terms of other things just to highlight, I think section 6.6 is worth a read for people on latent social care demand. You know, one of the issues we've got, and we got a number of grants from government last year to fund delivery of the services because of COVID. Some of those services couldn't happen because actually restrictions meant they couldn't, and it's only when things fully open up will we see the full demand for adults and children's care, as well as housing. In terms of section 7 and reserves, I also would like to bring attention to 7.4, and what you've got there is a nice table, and I think I've mentioned this in the statement of accounts, but I'll mention it again here. It shows that we've got significantly more reserve balances, but actually we've not in reality, because we've really only got, after you take things away, about £14 million worth of available reserves, because other amounts of money have been given to us to give out. That's all I wanted to say, is highlighting what's in there. Happy to take questions from the committee.
Any questions? No. I've got an observation to make and a question as well. MHCLG have been talking to me rather than me talking to them over the last week, and they came out with the figure that 64% of all our income gets spent on care services. Would that be right?
Yep.
No, and they were also saying that our reserves are basically finished. Again, you just said it, 4 million. Is that effectively finished?
We have, thank you, Chair. In terms of the numbers, and for most councils, we've seen expenditure on adults and children in particular go up by about 2% a year for about the last 7 or 8 years. And our figure is roughly in the mid-60s, so I can recognise that figure. In terms of our reserves, I do a robustness statement every year and a statement of accounts. It's called a Section 25 statement. Every Director of Finance has to do it as part of the accounts. In there, I talk about the adequacy of our reserves, and our reserves are extremely low. And if we have a lot of adverse issues or we don't deliver to budget, we've not got significant amounts to bail us out. If you look at our gap going forward, as I've said, we've got 14 million of available reserves at the moment. We've got a £26 million budget gap next year. So, you know, that puts it in perspective. Obviously, we're looking at ways on savings, efficiencies, and other things to bridge that gap. But if it were left to reserves to bridge, we can't bridge that gap.
Councillor Sainsbury.
Thank you, Chair. I just want to quickly touch on the key areas of underspend. Because obviously, you know, I'm just looking at it, and a lot of the reasons for underspend are because of COVID-19. And, you know, really, I just want to, you know, maybe get some clarity. You know, my assumption, like, I assume this is, we're probably going to see overspend going forward in some of these areas if they're because of COVID-19. You know, what thoughts do you have on that? What worries do you have where we are underspending now? What do you think that will be in the future?
Okay, in terms of where we are at the moment, the period 2, sorry, we're in July, aren't we now? Yes. At the start of July, we take the monitoring on a monthly basis to Cabinet. We've done July. At July, we took the figures to May, and it showed a 3.7 million overspend. We have got the draft figures up to June now, and obviously, because of the way the committee cycle works, we'll probably report June and July to the September committees. It's just the way, because we have a 6-week gap of committees now because of the summer recess. The June figure is roughly about 300k overspend, so we've brought that back in. However, within those figures, what we've got is a 6 million overspend, which is very similar to what you can see in the figures that went to committee at the start of this month, a 6 million overspend in people and communities, of which 4 relates to adults and children's and 2 relates to parking income. The rest of the services overall, although there's ups and downs, bring us down to break even, and we've got some one-offs in there that help that. I am concerned in terms of this, and part of this 6 million is about the latent demand figure that we talked about, which I highlighted a minute ago. Part of my worry is we've put another £8 million in the budget this year for adults and children's, and we've got 4 million on top of that already, potentially. And so a lot of work is going on at the moment to assess if that's really the figure it's going to be, because a lot of that is around estimates, and there's a significant bit of work going on at the moment, which is going to be finished in August, to assess it. But if you look at stuff that comes out from the LGA and other bodies that represent local government, this is what directors of social care, adults and children, and the LGA are saying as well. At the moment, we're not quite seeing that activity level, but as I said earlier, the activity level will go up when things open up. And the worry I think adults and children have is a semi-explosion is going to happen if we're opened up when the schools go back, in terms of things, because we can actually now provide all those services. We haven't been able to provide those services in the summer term because of restrictions.
Okay. Councillor Joseph.
Thank you, Chair. So, as I understand it, Pete, when we went to MHCLG originally, and obviously we're one of 4 councils or authorities in the country that got this additional help, our reserves are virtually 0. We've got no more assets to sell, and we've reduced spending. We've got one of the lowest unit costs in the country, so there's very little else we can cut. So where do we go from here? Are we not in such a precarious situation that one little thing now might tip us over the edge and we end up, you know, with that nasty notice?
Thank you, Councillor Joseph. In terms of where we are at the moment, we're not at that tipping point. We're almost at it, if you like. We are solvent for this financial year, and even if we didn't, even if MHCLG came to review, and they're probably not going to, this is not going to happen, but said we're not going to give you capitalisation this year, we've got reserves this year to keep us solvent. We're doing significant work on future years. If you think of where we are in overall terms, the big factor is COVID. We had a plan just prior to COVID to try and get sustainability, and we're getting quite close. A lot of that is impaired. The thing we're wrestling with at the moment is, apart from looking at additional things we can do in terms, you can always make efficiencies no matter what anyone says every year. You can also deliver things in different ways, which is what we're looking at the moment as well, in terms of all of our key contracts. However, the big factor is going to be COVID. and how fast we come out of COVID, and actually, is the government going to fund additional spend on it or not? Because it's not only an issue for us, it's an issue for all councils. And so at the moment we've got a COVID reserve we brought forward of 13 million to hopefully cover some of that. And again, this year, looking at the outturn at the moment, if it's 0.3 of a million over break even, we won't need that. However, it assumes then the capitalisation direction is used. This will depend now on the work going on with MHCLG for them to decide what the easiest and best route for us is through to sustainability going forward and what that actually means. And again, I had a conversation with MHCLG this afternoon. There are so many variables at the moment that are unknown, and even they will say that it's a difficult call at the moment to figure out which way is the best way forward.
Thank you. Obviously, COVID's affected everybody, and we can't take that out of the equation because it has had a massive impact on everybody and made things difficult. But how close to that tipping point are we? I mean, obviously the government will have to offer us some help, because otherwise the majority of councils in the country would go bankrupt, and that would be ridiculous. But they're not going to offer us all of the help, are they? And how are we going to bridge that gap?
So thank you, Councillor Joshi, and you're quite right. And there are a series of things we're looking at the moment in the work and the interviews that MHCLG have done. So MHCLG have interviewed, I think, about 30 people now. And unlike the LGA ones, these have mostly been one-on-one interviews with key people around the council. From that, they've devised or come up with a list, and some of that are the things we haven't done in the past because they've been impaired. Some new ideas, some different ideas, some things we've had in already, but they're going to take back to MHCLG. So, for instance, if you remember, as short-term fixes, we had 1 year MRP holiday or 1 year pension fund holiday as well, which have both happened in the past in various places. You know, both of them one of them worth 10 million a year for 1 year, and one of them worth 15 million. In their report, they're still going to put those in, because it could be that we can deliver quite a bit of a gap with, or the vast majority of it, with ongoing savings plus one-offs, and then a lot will be dependent on what happens with the fair funding coming on. So we will try and build our ongoing savings to try and cover as much as possible, and again, a lot of that links to COVID, what comes in and what comes out from COVID. Add to that one-offs, which will leave potentially a very small difference. A lot of that will then depend on how fair funding works in the future. Another big factor to take into account is, of course, local government settlement in December, which none of us know at the moment, and how much that will be. As an example of that, this year, the government has funded COVID. Well, they've gone a little bit further now because we've got some more one-off grants. But in the base budget, they gave £9 million for COVID this year. Now, if we were to give £9 million for COVID next year, our 26 million comes down to 17 million straight away. I think one of the key things here is a balancing act, because you can't be too gung-ho with what you do. You've got to go as far as you possibly can, but once you go past certain points, it starts to increase cost as well.
Okay, any other points or any other questions? Nope. Okay, thanks, members. Therefore, I would like to move to the recommendations on page 267. I've no intention of reading all the various recommendations. I'll just say recommendations 1, 2, 3, 4, 5 and 6. Members, if you're not in agreement, please can you let me know now? No hands are raised. Thank you. The recommendations are therefore agreed. Items 12 and 13, and correct me if I'm wrong, there's nothing to report. So we will go past that. There's no vote needed or anything with regards to that. On to the work programme now. Item 14.
Thank you, Chair. This is just the work programme for members for the year ahead. So obviously, if there's any suggestions or any extra items to raise, obviously to let me know, and I can add them to the work programme.
Members, any suggestions? I've got one. We asked last meeting that we had a report outlining the progress that we're making towards dealing with COVID and its demands on us. Whether that will come in within the various reports or whether we need to have a separate COVID report, I'm not quite sure.
And also we need to timetable in 2 reports on BICF, Integrated Care System.
Oh, of course, yes, yes.
I would suggest the first one would be ideal, probably around November, and the second one in March.
And it's all going to come together next year, is it?
Yeah.
April next year?
Yes, that's the timetable at the moment.
Right, okay, November would be ideal then.
Yeah.
Yes. Anything else? No? Okay, thank you. Sorry, I thought you were pointing out. There are no questions or comments there. Therefore, I'd like to move to the recommendations on page 313. That is to note the work programme for 2021-22 together with the items we've just added then. Members, if you're not in agreement, please can you let me know now? No. Thank you for the recommendations, and they are therefore agreed. This brings the meeting to a close. I'd like to thank members and officers in attendance for the contributions, and for the first time, I think, since COVID, have a safe journey home.